How did you go about your own journey, Anubha? There are a lot of young people who look up to you, watching you right now. How did you go about your journey of becoming more financially independent, financially aware? Please say you've been watching the Money Mile.
Well, I've been watching Money Mile, and Vivek's sort of been a friend and a mentor. So there's always this push to think about money. When I said in my earlier response that our relationship towards money, the female gender's relationship towards money, and I'm not making like a sort of a blanket statement or anything. My relationship towards money was always like, hey, I'm okay. I've got some FDs, I've got some jewelry, I've got a husband, and it's a terrible thing to say because I was earning well, I was financially independent, but I never looked at the salary as a reason to why I was working. And of course, I'm privileged to say that. A lot of people don't have that privilege. I'm completely aware of it. But I think it's odd because I think when I was in my first job and maybe earning $8,000, my father said to me, if you're going to be a journalist, there's going to be no pension. So please think of this.
That's something we should talk about.
He comes from an army background where there was going to be a pension. And I was like, it's $8,000, come on, let me spend it. What is this damn $1,000 that you want to take out from my 8,000 rupees? And I think since then it's been incremental. I've been through the same journey that your study is talking about, where I've left those decisions to my father, etc. But I think after putting in about 16 to 17 years in a profession where I had sort of some different pockets.
You had income, but not a very constructed plan. So
I had income.
Would you recommend that one should go to a good financial advisor, start sitting down? I mean, both for a man and a woman. This is not gender, determined. And we keep telling people that find yourself a good, credible advisor so that you can sit down and look at a holistic picture of your finances rather than just buying products.
I think it would be no exaggeration that after about 18 years of a very hectic, stressful professional life where I was earning money and I had something to show for, it is a meeting with a financial planner which actually changed my life and allowed me to embark on a journey that I would have never embarked, which allowed me to actually leave my job of 18 years, which was hectic, stressful, which gave me the confidence that, hey, I can embark on a journey that's something different, which gave me the confidence to say, hey, I can take this risk. I can sit at home, think for 3 months about what I want to do. It's a financial planner who made me understand that there will be a cost to this. But hey, you're best placed to take this decision. This is something, it's funny, I have a lot of women who are extremely high achievers, friends, etc. And we talk about this so much, so many times as to how important and intrinsic a financial planner is to our life ahead. I think, men sometimes think that women get together and talk only about men. We don't.
Abhinav, another interesting thing which came up in the survey was about the savings objectives of working women. They seem to be very tilted towards kids' education rather than thinking about their own future. And I think that's again a very Indian culture issue that we are very fatalistic people and we think that nothing's going to happen to us. We'll deal with retirement and we'll deal with life after 60 when the time comes. But these are all things which are unfolding before us. We are seeing health issues coming up at fairly young ages. And I find, and I don't know, Anubha, if that's the experience you have when you meet people, I find that the minute there's a child in the family, the whole conversation is now suddenly about financial planning. Most people who call me either have just had a child or are planning to have one, and now suddenly they're thinking, irrespective, whether in their 30s or 40s, now thinking about financial planning. So from that perspective, what is it that you would advise people to do? Okay, you didn't start in the 20s, so you're not going to get the power of compounding and make multi-crores. But even if you're in your 30s or 40s, what's a good starting point for you?
So again, what you're talking about, the survey, the India Protection Quotient revealed that when people are in their 25 to 30 year age, they are more cued on to spending. They are thinking of buying a car, buying a house. That's their priority. As people start moving into 30s, that's when the children education start taking priority. For women, marriage is also a bigger priority many a time than the education. Men are supposed to take care of education for children. Retirement planning, only when a person hits the age of 40 is when they start thinking of. So you're right, the possibility of at that age, the power of compounding, they won't be able to have that. But that doesn't mean they can't do anything. Any time is a good time to start. Yes, they will have a issue that as compared to someone who started planning for retirement when the day the person started working, as compared to that, a person who starts planning in the 40s will have to save a lot more money and still will not be able to reach where the person who started at the age of 25 has reached. And that's why one should always start early. But given that nothing has been done so far, should we just leave it? The survey also revealed that a lot of people leave it to the God. About 19% people said that I don't want to buy a term plan because God is there.
20 years ago, 10 years ago, these were not conversations that you had. The minute you said will or the minute you said insurance, it was like, oh, are you suggesting I'm going to die?
And in fact, term plan is one product which has a pull and it's not a push product. It's not that our agent advisor only have to go and talk about it and then a person starts thinking of a long-term planning. People are coming on their own to online channels to buy term plans, which clearly shows that people are now thinking of the risk of death. And the reason could be that now this is maybe a person of my generation is when we started taking loans to build properties, whether buying a car or a house. So risks have increased. Whereas our parents, they were first accumulating the money and then spending. Whereas we are
They were
spending
more debt
first.
averse, we are more open to...
So when the risks are more, you need to cover for those risks. So any asset which you buy for with a credit, there are products which are credit life products which are there, and one should always go for credit life. That if something happens to the life of the person who is paying for those debt, the family should not lose that asset. And Vivek, the good thing is, if a person buys it at a young age, the premiums remain the same throughout the lifetime of that policy.